Welcome to the Dragonfly Trading Channel. My name is Carrie and I'm a full-time trader and a mentor for struggling traders. Today's video is going to be the mega bull scenario for Bitcoin. We're not going to go over anything else, just the ultimate bull scenario. But I do want to go over a few things before we get into how high can Bitcoin go. I want to go over what to look for and how to know if we really are going to be in a bull run. All right, let's get started. So the first thing I want to go over is, what does RSI do when it's in a bull run? And what do we need to look for? The first bull run that Bitcoin ever had, RSI pushed up from 30 way up into the 9100s. That is signal number one. Signal number two is that RSI holds the 50 to 40 range. And as you can see, that is exactly what Bitcoin did, and then pushed way up into the 90s again. Then it held trending in between that area. It wasn't until 40 was broken that the bear market was in process. The next bull run, Bitcoin came from 30, pushed up over 70. That is signal number one. Holding 40 is signal number two. Signal number three is pushing up over 70 again. You need three components for a bullish transition. Then you want it to trend from 40 to 100, and that is exactly what Bitcoin did here. Trended from 40 to 100. It wasn't until 40 was broken that it was in a full-blown bear market. Also, in this transition of number three, notice that that was when all of the moving averages crossed the 200. Signal number one is coming from 30, pushing up over 70. Signal number two is pulling back, holding the bullish zone, not breaking 40. Then you want Bitcoin to push up over 70 again. 1, 2, 3 signals. Then trend in the bullish zone, not breaking 40. When 40 is broken, we're in a bear market. I'm on the 3-day time frame. This section right in here was trending on the daily time frame. This was a smaller bull run. Okay, on the daily, it comes from 30, pushes up over 70. Then trends in the bullish zone, not breaking 40. When 40 is broken, we're in a bear market. Confirmed. Notice that all the moving averages cross the 200, the same exact spot that Bitcoin pulls back and holds 40. Comes from 30 and pushes up over 70, signal number one. Signal number two, pushing up over 70 again, is signal number three. Then trend in the bullish zone. When 40 is broken is when the bear market starts. So what does Bitcoin need to do right now? Let's talk about this push to the upside. As you notice, Bitcoin came from 30 and pushed up over 70. But what did it fail to do? It failed to hold the bullish zone and came right back down to 30. So we got signal number one, but we did not get signal number two. Then it bonked its head on 70. This was a failed transition. So right now, what we need Bitcoin to do is, it's come from 30. We've gotten the push over 70. We have signal number one. When Bitcoin is done with this push and it pulls down, we do not want to see the daily break 40. That will be signal number 2. Then we want to see it push again up over 70 for signal number 3. We then have a transition. At that point, Bitcoin needs to trend in the bullish zone. So if this is going to be a mega bull run the whole time that it's pushing to the upside, we want to see it trend in the bullish zone. This is a must for a bull run. All right, now let's talk a little bit about some counts. Now there's a lot of Elliottians out there looking at this many different ways. But one thing that I talked about many times in my videos is there's only 2 places in Elliott Wave that corrections are allowed to overlap. It's in a nest of 1s and 2s. So when you have a wave 1, 2, 3, 4, 5, in this area right here where we build a nest and we build a 1 and a 2, 3, 4, 5, it is allowed to overlap here in the 1s and 2s. And it is allowed to overlap here in the 3s and 4s. Everything in the middle is not allowed to overlap. So with that being said, there's an area of overlap right here. So there's only 2 choices. Either this area in here is 3s and 4s, or it's a 1 and 2s. So let's talk about the first scenario. Let's go on regular scale and let's take a look. The first scenario is that this wave here was a minor 1 and 2, meaning that it was of smaller degree than this one. It pushed to the upside with a wave 3, a wave 4, and a wave 5 for the main third wave. This wave is of higher degree, which you would expect it to be because it is bigger. Wave 2, main wave 3, this wave 4 pulled back to the prior wave 4, which is absolutely typical, higher degree 4, and wave 5. This would mean that this is a complete cycle, and we would call all of this a 1. And we're looking for a 2 that could be complete or could not be complete. This is scenario number 1. The next scenario is that all of these are a nest of 1s and 2s. Now remember, as you're going up the line, every 1 and 2 is of smaller degree than the prior. So every one of these should be getting smaller in price and in time. This wave here was 6 times as large as this entire section. You don't notice that because we're on long scale. When you put it on regular scale, you can see how powerful that wave was, how vertical that wave was. So calling these all 1s and 2s, I don't agree with, but it's possible. It would mean that this wave cannot break this low. The only other option is to say that this was the top of a third, this was a fourth, and a 5th, a top of a main third, and this is pulling back for a 4th of higher degree. Because remember, this is the only other area that is allowed to overlap like this did. But that would be an awfully overextended 5th, 6 times the size of this entire run from 0 to 16,000. So let's talk about this. So the options are that we're in a fourth wave and we're going to push up for a fifth wave and then the cycle is over. That all of these are ones and twos, which means we would be looking for a gigantic third wave. Or this is a 1 and a 2. We are looking for a 2 and we're looking for a gigantic third wave. So it doesn't matter if these are a nest of 1s and 2s or the whole thing is a 1 and a 2. We're still looking for the exact same thing. The only difference between those two scenarios and looking for a big fifth wave is when that fifth wave is over, we're looking for a mega crash. So my bias is that this is a complete cycle and that this is a wave 2. Am I correct? We'll have to wait and see. Alrighty, so now for the good stuff. The mega bull scenario is that this wave is a wave 1. This pullback is a wave 2. That we are in the process of making the wave 1 and the wave 2 of a third wave. I can tell you that this wave will get overextended from FOMO, from buyers. It's just going to get overextended. So minimum, my bias is 154.236. It will pull back for a fourth, holding this fourth wave territory. This is how we'll be able to tell the difference between a C wave and an impulse wave, and then push up for a fifth, approximately 237. Why do I know this is going to get overextended? Because they always do. Look at this, wave 1, wave 2, wave 3 that hit the 4.236 extension. Pulled back and gave a wave 5. This is the inner degree, wave 3, not even the main. 1, 2, 3, 4, 5. So the inner degree hit a 3.68 minimum. If that's going to happen over here, I'm giving it 2.618, which is not even as high as the 3.618. So this is what we're looking at. Now, one last thing. How will we know the difference between an A wave, a B wave, and a C wave? The difference will be when we get up here. You will see the 5 waves, and then it will need to pull back and hold fourth wave territory and push up for a fifth. This is how you will know that we have a third wave and not a C wave that's going into the expanded B pocket. All right, so I hope you enjoyed this video. Let me know in the comments, and I will see you in the next one.